All right, ladies and gentlemen, I got your watch list coming into September 20th, 2019, and I can't believe September is almost over. But we've had the Fed, we've had the follow-up today, which was very weird, and we're coming into the close tomorrow, and it's going to be exciting in the process of going over what I wanted to cover. I was looking at one of the plays I made today, and I thought, hey, might as well talk about this in depth and give you guys even a little bit of a strategy. So I am going to talk about how to make $50 or even $500 if you want to risk it every Friday. It's going to be a mix of both buying options and then using spreads. So if you haven't checked out those videos, I have them in the description of the live stream videos, or search spreads or advanced Robinhood strategy, the trading fraternity, you'll find on YouTube. But we're going to talk briefly about what happened today, cover the keys for tomorrow, cover the plays for tomorrow. Before that, I will cover the strategy, and then we'll go over the stocks to watch tomorrow. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you like it. Make sure you catch us live. We are live Monday through Friday, 30 minutes before open. We're going to see you tomorrow. It's Froggy Fridays, baby. And most importantly, you can't forget to do this. You need to post your watch list below. Let us know what you're playing. We got to source that information and come here pre-market to go over the watch list and what everybody else is looking at. So I hope you're ready. It's game time, baby. So let's get straight into it. As far as the keys for tomorrow, well, actually, I guess we'll start with today. Nothing too crazy. We did gap down slightly, came back up, and then we came right back down. You can see there when we turn on the after hours, some people thought it was pretty bad. I don't think it was too crazy. The crazy part was a lot of the downward candles were kind of out of nowhere, and this reminds me of anything liquidity, and that got brought up again as we got the fourth day of the repos. And like I said yesterday, a lot of people talked about it today. Is that an issue? It's only an issue if it persists. Powell even said 6 weeks is when we'll see if there is something, a real issue with liquidity. So watch out for that. You even got a government stopgap bill to fund the government till November 20th. That could have caused it. The taxes, oil. So there's a lot of things going on. It is starting to get a little fishy, but nothing that's going to stop me or change any other strategy, because we had that 11 at 11, and some people are focusing on that, where make sure you guys are focusing on the right things and ultimately the risk reward, especially if you're trading it. But don't get scared of some of this stuff that, yes, it could be telling you something, but it's not going to be actionable day to day as much as it will be actionable a few weeks or even months from now. But that was pretty much it. The only other thing, this leads for the keys for tomorrow. I'm saying watch out for bad trade news. Today we did see one of the advisors for Trump, Michael Pillsbury, and this was reported by the South China Morning Post, and this came out earlier in the day, and it seems like the market didn't start reacting till a few hours after, and it was hard to tell, was the market reacting to that or not? But essentially the report was saying that Trump is ready to raise tariffs if China is not willing to make a deal. Then there was another piece of news that came out a few hours, an hour later after that, that said China does not want to be pressured into negotiating or something like that. But really what I'm going to be looking out for tomorrow is bad trade news. It was prime today, but it didn't hit the same way it did. Usually we've seen, if that was the case, the market could have took that a lot more negative considering everything, but we haven't heard Trump comment on Powell. We haven't really heard him escalate the trade war, but it's kind of prime there. So watch out for bad trade news to maybe come out tomorrow, or watch out for a response from China coming into this week. So that will give us more insight, but watch out for that. That's like the only, thing I'm looking out for, besides the fact there's a lack of liquidity. But if anything, watch out for quick drops and watch out for the quick pops. They don't have to be accompanied by news, and that's what happened. We kept looking for news today. It's hard to say what was causing what. If anything, liquidity again. So watch out, and we'll see if that does escalate tomorrow. So make sure you're there live. But I think there's going to be some good flips. I think there's going to be good opportunities to make some flips, but a bulk of the moves are going to get pushed into next week. So if we don't see any trade news or anything, or any more developments or dialogue between China or Trump and the Fed, that should probably come around next week. So we'll see what happens there. But if anything, push it to the wall, my friends. Find the frogs. Buying in the morning is not the move on these daily contracts. So selling premium is, though. So again, if you are going to play contracts that expire tomorrow, and again, understand none of this is trading advice. Trading is extremely risky. You can lose all, if not most, of your financial investment. Please consult with a financial advisor. This is educational purposes only. But if you decide to trade a daily option, watch out. Some people like to go after them in the morning. Really, it has to make a gigantic move and hold that move for that contract price to be there. How we push it to the wall, how we catch these frogs, is identifying them in the morning, waiting till the move happens, let it decay a few hours, and then we get in later. And if you guys don't know what the frogs are pushing it to the wall is, search those key terms and put trading fraternity at the end. But we'll discuss it here a little bit. But that's quite simply your keys for tomorrow. Let's talk now about this strategy, how to make $50 or $500 in a day. Now, why do I say 50 or 500? Because the choice is up to you. One, if you want to go, and somebody pretty much brought this up, they said, is it a viable strategy to sell premium or sell credit spreads the day before expiration and collect the premium the next day? And yes, it is. And I said I did that sometimes. The opportunities really have to present themselves, and you may not make 50. Again, the more money you collect, the riskier it's going to be. So even $50 is decent, but it's definitely viable. And considering you could cap the risk with credit spreads, it's not that bad. And again, watch the video on credit spreads. We'll run through it here, but essentially what I'm saying with this strategy is come Wednesday or Thursdays, it's easier on Thursday. What you do, you sell contracts expiring on the week. And in this case, I did it with Disney. But then to give me that 500 aspect, what I'm trying to say is you could sell a 70% odds probability play, which has a 70% chance of winning for you. So 7 in 10 chances that you're going to walk away with this profit. In this case, we collected $59. And wait a minute, dude. Oh, Robinhood screwed. I got filled on 2 of these. Wait, what? Yeah, I got filled on 2 of these. So even though it's saying 60, I should have actually done it for $30 in this case. But damn, I didn't. Man, it filled me twice. How come I didn't even notice that till now? But it again, I guess that even makes this title even more valid. Anyways, moving along though. The point is though, I collected $59 in credit, and the idea here is you have 70% odds. What I did was I sold a 133 put. I sold that put, and again, the stock is actually coming down, so it's at 133.30. So what I did was I sold a 133 put. I didn't own it, and what it means by selling it, I never owned it in the first place. I shorted it, and then I bought a 132. So pretty much if it goes below 133, I start losing money all the way until it hits 132. So if it goes below 132, I would lose on this, but it makes sure I cap my loss. So a lot of people think selling premium scary, risky. Not if you do it on a spread like this. It is capped. In this case, it says I collected $60. I should have got back $30, but I did 2 of them, but we'll keep it simple with one. If you sell one at 133 and then buy a 132, your max loss could be $100, but then you collected the $30, your max loss is $70 because you get to collect that cash. But the whole idea is tomorrow these contracts expire. So if Disney closes above 133, or even if it falls even if it closes at 133 on the dot, the fact that we collected the premium, you would still walk away a winner and you would get paid $30. Now, the whole concept is premium expires worthless most of the time. That's why this play has such high odds. So by doing this, it is a lot more riskier. Again, I have made premium selling videos. I do not recommend this if anything. You got to realize that when I'm coming down to this, when it comes to selling premium, the term is selling premium. Sell as much time as possible to get more premium. The only appeal to this is fast, quick money. That's it. The fact is you could still get a 70% odds play if it can switch on you very, very quickly if there is volatility in the market moves. But this strategy allows you to do something where if you do make $50 every week, that's $200 a month. That is really not that bad, especially when it only requires $100 of risk. And again, that's the key, is that or in this case, it would be 200 because I accidentally doubled it, but still, that's not too bad. So that's the first part, and that's what I'm saying. You guys could start identifying, and you could even do this tomorrow morning now. There is going to be a play, and this is the one we looked at, and this is going to be the second set of this play. We bought these Home Depots today, and I bought it to hedge a spread, but then I integrated it with that Disney play. But there's going to be some premiums tomorrow that will be expensive. Like these at the money are at 24 cents. Literally right before close, they were at 40 cents and they dropped. But watch where it opens tomorrow. This could still be worth $40. You could buy these for very cheap. There's some that you could still sell for $30 on that same Friday. And if you really want to take the risk and think it's going to move, you could go in the money and collect even more. But still, there's plays that you could do on there. Now, here's the point I'm saying of how can you turn that now into 500. This is exactly what I did. So I meant to sell this Disney, and now I'm in this credit spread. So if you guys saw this, here's another credit spread. But instead of selling it the day before, we sold this about a week and a half, 2 weeks ago. I sold the 227, bought the 230. I collected $180, and the max loss on this would be $250. That's the difference between the strikes. So if I got 180, realistically, my max loss is $70. Surprisingly, the same exact max loss as that Disney play, but in this case, I collected $180. That's why this was a good play. But this one actually had lower odds because I sold it in the money contract. But now this came down here, and then I was thinking, well, Home Depot's right there at 227. I collect $180. So pretty much take 227. This is where I lose at $180. It comes out to like 229 or something. 229.30, that's my break even. So anything above 229.30, or if it closed at 230, I would lose $70. But then I noticed, hey, these contracts were $22. So what I did was I bought one of these contracts to hedge it. So in the case now, the only way I could lose now on HD, it's either I'm going to hold this contract to expiration tomorrow, collect the whole entire credit, and make 180 if it drops below 227, and then I spent $20 on this, so then I'd walk away with 160. But now, if Home Depot bounces to 231, even though I'll lose $70 on that credit spread, I should be able to make money here. And then even though I did spend money, this was the confusing part. I could get cucked if it closes at 230.30, or if it goes higher than 229.60, or if it stays at 229.60, I'll lose on both sides pretty much, or I'll lose at least the premium. So hopefully, I know there's a lot to take in right now, but this is pretty much what I'm saying with the strategy. But now, what made me really want to do this? I sold the Disney. I collected $30. I was like, well, I could go. I said, should I make this hedge or not? And this is what you could do even if you didn't own the initial HD spread. And again, I like this play, so I might even do it tomorrow. The fact that I accidentally sold two, I might buy another one of these, or now take that additional $30 and use it to flip a weekly or a next week contract. So that's what I'm saying. You could take a 70%, 80% credit spread, sell it, collect $30 to $50, and if you're cool with that, you let that expire, collect the $30, $50. If you want to YOLO and gamble, take that new credit, that $30 or $50, and then go put that into a weekly or a next week option. Pretty much what I'm saying, take a high probability credit and then take the credit and put it into a low probability play that could yield you 500, 1,000%. And in this case, that's why we're aiming for the 230s right here, but that would have to go to 232, just right above where it was at today for me to make 1,000%, but that's not too unlikely, but statistically it is. So consider that and keep that in mind tomorrow. I'm going to be looking at plays like that tomorrow, and we'll see, but that's the one we made. So let me know what you guys think about that, and be careful. Again, paper trade, if you don't understand the spreads, watch the videos, come on stream, ask questions, and you guys are seeing it right before your eyes, and at the end of the day too. If you don't know anything about spreads, if you are trading your spreads, remember, push them to expiration and use the time premium in your favor. That's what I'm trying to do here, to collect the maximum amount of money, because even though I've already made 50% almost, there's still a lot of credit here. And then again, you see too, when you sell a high credit play, these are how it could really, really benefit you, putting you in a position like this where you're coming day of expiration. If one quick move could really make us a lot here. But again, don't fall into the trap when you get offered gains $50. Easy $50 in a day or two, making 500, making high credits. The more you get offered up front, the easier it is to make a lot of money faster, the riskier the strategy. So please don't forget that. But let us get into the plays. As far as that, even today, I made that Disney play. We're holding those Home Depots. The other play I made today was a log M. We got an October 75, and I got lucky on the fill. We saw it, but they announced that they're going to be selling a stake, and I like them. The volume was historically big, and if you guys don't know, I have a video on unusual and historic volume. You could check that out. But the fact is, Log Me In has been a company, it's been really, really expensive in the past. So the fact they're selling a stake or any rumor of a buyout, even their last earnings, they dropped that from 2019, they had a lot of upside. But that news came out. We bought that option. And again, it had good time. The news was there. It was working, and I got swept on it. Again, I don't know how I got filled, but we bought these for 60 cents. They shot up even to 280 at one point, and they closed there at 155 on the bid, so not bad. But October 75, the Septembers, again, we called these out. So if you were on the stream, you saw it. If you were on the stream alerts, you saw it. I even put an error on the stream alerts. I said September at first, and those Septembers actually ended up going up 1,000%. Those went crazy. So these were a better return, but they expire tomorrow, whereas we have those Octobers. And again, with all that news, I think it's going to be a pretty good situation, but watch that. And then we got those HDs. That was the last one, and then I closed out of that Roku credit spread. So we did a Roku credit spread yesterday. I was up 50%. I think it was only like $25, $30. I didn't like how Roku was looking. I'm sure you guys saw it today, even though it did bounce up. And again, this is why, and this is what I did. Maybe I should even explain that play with Disney. Roku was plummeting. It hit a low yesterday. The premium was high, and this is where I've been liking to sell the credit spreads, is selling into the weakness where it's like the puts are super expensive, because that's what happens. That's how insurance should be. It's going to be overpriced. So we sold that. It bounced up. I was able to close those off in the morning, get 50% and walk away, but I covered it just because you never know. Roku could drop out of nowhere. It's very volatile. volatile. We had 50%. I didn't like it there because it dropped further than I even expected. So took the profit, walked away, and there was only $20 left to credit anyway. So I said, I'll cut that out and put that towards something else. And again, if you see here, it's the same thing with Disney. Disney just went literally straight down, plummeting. It's breaking out of its range, and you can see even in 2 weeks, it's the lowest it's been. So if it does keep going, it'll we'll lose on it. But even then, my plan, even with that Disney tomorrow, let's say it starts working against us, I'm literally just gonna roll that over into an October contract on the September, because Disney, if you know anything about Disney, it's a good stock. I like it, but it likes to stay range bound, especially over the last literally 5 months. So we'll see what happens there. But if it does break out, it dropped there, I mean, we'll get crushed, but thankfully the risk is capped there. But those are the plays we made, so watch out for those. As far as any other plays today, watch out for FedEx. They did good today. UPS had bad news. They got like a lawsuit, and FedEx ripped off that. But the fact you could see the SPY coming down, they had an uptrend. I think that's good. Good news at the very least. Johnson & Johnson, I want to keep an eye out for this again because it had a positive day yesterday, but now it's a little bit more consolidating. If it does break out, pretty much watch. It's either I think it's really going to inverse the market. So if the market goes down, watch for them to go up. But if the market goes up, wait for it to go up too, or wait for it to do the opposite. But it did follow along today, but I'm looking forward to inverse. Oh, and then Boeing, I forgot. We played this today too. Watch them. And we got this call, the 20 cents for a 397.50, and we played those in the morning, and they went up 50%. They're pretty much worthless now. And somebody asked, they're like, do you really think that Boeing is going to go up 10? It was at the time, it was like Boeing is going to go up $10 by tomorrow. And I said, yes. I said, don't think that it's going to go there, but I think it's more realistic. And what I meant by that is the fact was, the stock was trading at 387. The way I was looking at it was early in the morning there. If Boeing could close up $5 today and then another $5 tomorrow, and literally if you do the math on that, $10 is about 3% in 2 days. I think Boeing could definitely do that hanging out near these levels, but it went up and we were up on the contract, but it came down. But I'm going to look for these. And again, I was going to spend like $40, and I said this. I said, hey, I'd rather spend a little bit now. I spend half of that, $20. And then if it comes down, we could average down on it. But I didn't average down today, but we'll look into it tomorrow. I still like it. Got disappointed because it hustled me out of this play, and I still want this play. We're going to see Microsoft. I wouldn't shut up about it in the morning. They had the buybacks. I said remind me on it on the watch list here yesterday. I was looking at the 146, and crazy enough, they're the same price this morning. So that's telling you something. These were at 15.60, and I was like, damn, that's still up 150. I liked it. I hesitated, and before I knew it, it shot up and went up to like 30 cents pretty easily, but it's still holding. So watch. You can see Microsoft still low IV. And it has news with it, and it's been leading overall with tech. And again, it's near these all-time highs. So if it breaks out, it could do something big. So I like those, specifically the 145s or the 146. We'll see if the prices come down tomorrow, but I'm going to be watching those in the morning throughout the day and even pushing those to the wall. But if anything, I want time on that. There could maybe, if there is a big day tomorrow, you could probably flip the shorter terms. But overall, I do like getting time on this play. Going back to here, we got Log M. We talked about Home Depot. Again, I like that. Either I think it's going to come down and we'll make more money if it comes down, but if not, I think there's a good chance it could really even bounce, and it's just been doing some crazy moves, so those weeklies could be good. Watch McDonald's as well. We said those 210s. It's bouncing in between there, but it looks, even if you see how it is with Home Depot and kind of how they've been, they're kind of inversing, so keep your eye out for that. And then Microsoft, like we said. Disney, they had a big move down. I sold the puts on that. I mean, I'd watch for it. Maybe it could drop a little bit more, but even in that same context, watch Netflix as well. They keep coming down. I said this yesterday. If they keep coming down and it starts to break through here, they could really break support. And really, last time it has even broken these supports, it took a while, but it did eventually break. So this could be one we either sell puts on or we wait for. But I didn't sell puts on it into close because you see how it hit the low and then bounced up. This wasn't as good as Disney, which at Disney, when I sold the puts, I was literally selling into the red. So watch out for that. But then even then, we just had it up there. Watch Roku as well too, because the fact that I covered that credit spread, I think Roku's just going to be volatile. It has the potential to move a big amount of dollars considering these last weeks. So watch that. That could probably be some good short-term flips, and I like that. And then even Shopify in the same token, they were down a lot today, and they keep doing this bounce. But if you really even see it on the daily, they're edging down. They're not looking good, but maybe if they do bounce and again do what Roku did a few weeks ago, that could be good. Then on the reverse side, if anything, I mean, it's hard to see. I think the market has to start going down. That's when we really saw this thing break out. But Cigna, watch Cigna and any of the healthcare. They've been doing actually pretty good lately. So I still am a little wary of this industry, but if they do show any inverse opportunity, I really like them. Keep your eyes out for those. And then now our favorite TLT. It had an interesting day today. The fact is, it's still up 0.5%, but the contracts are literally at break even on most of them, which is interesting because it was up 0.5% today. It was still up another 1/3% yesterday. It's almost up a full percent. And even at one point when it was hitting the highs, the premiums weren't going up. So this is telling you something. However, you're getting more and more decay. If there is a big bond movement, if there is any issue with liquidity, this is going to skyrocket. So watch out for that. But what I mean by that too, it's going to have this is going to have really, really cheap options. So watch those tomorrow. Same thing even with Bank of America. If anything, now these are going to be those volatile plays. Bank of America, those came down, but it's still holding up. I still like them. I'm still holding those. That's why most of the plays we got, none of them were weeklies. They're all coming into next week, and then October 11th or 4th, 11th, and 18th. So again, that's what I'm saying. Watch for the bulk of the moves, but these guys are still in play, and the fact that they're not, how they're moving is saying a lot. So the banks moved a lot more down, and then you literally got the direct inverse between, almost the same exact percentage up on TLT. Pay attention. This is what we said. I said, watch the inverse between the banks and the bonds. That is going to be the next key. So watch momentum and growth in that same respect. But if anything, make sure you watch this stream tomorrow. And that was your watch list, ladies and gentlemen. So make sure you post yours. Make sure you like the video. Make sure you're hydrated, healthy, ready to go. Get those push-ups, stretches. Be positive, respectful. Shout out the chat. Shout out the people holding it down, keeping it respectful. The coach loves you. I love you. I appreciate you all. And I'm ready for tomorrow. Let's make some money if you can. And even if you don't make money, even if you haven't made money, whether you win, you lose, you're going to learn something. Keep that in mind, you guys. Focus on the right stuff you need to focus on. Control that YOLO demon and be smart with this. Let's get strategic. Let's go, man. Chad's growing up, man. We got to level up now. Once we knock down the basic stuff, just little by little. But how long can you stay in the game is the key, my friends. That is the key. So let's go.